Did you know that without a good trading plan, your chances of becoming successful in the forex market is reduced drastically up to 80%? Whether you're a new trader or a seasoned trader, having a solid trading plan is your number one ticket to becoming successful and recording consistent profit and peace of mind in your trading. So in this video, I'm going to break down everything that you need to know to create a solid trading plan that suits your trading styles and your goals. So grab a pen, grab your favorite notebook, and let's get to work. Welcome once again. And this lesson, we are going to talk about trading plan. So when you look at trading plan, it's a very important part of every trading career. If you want to take your trading to the next level, you need to be disciplined. You need to have certain rules and regulations which guides or direct your trading activities. So every business out there has a business plan. So if your business can have a business plan, you as a trader also can have a trading plan. So when you plan anything, you are able to achieve your goals by following your plan. So if you want to achieve any goals, no matter the goals you want to achieve in life, you need to set a plan. You need to plan it and know what you need to do to accomplish your goals. So the same thing applies to trading. If you want to trade successfully, or for a full-time or part-time or whatever, you need to have a plan. You need to know exactly what you need to do, what you need to follow to achieve your goals. So this brings us to trading plan. So trading plan is a document which contains the rules and regulations you need to have and follow as a trader. Every single time you trade, you are trading based on certain rules and regulations which has been proven to work in the market. So you have these rules and regulations around your trading area, whereby you can see it as often as possible. So it is like a constant reminder for you as a trader that you should not do this, you should do that. It is a constant reminder for you. So when you look at the Google definition of trading plan, it says a trading plan is a systematic method for identifying and trading securities that takes into consideration a number of variables, including time, risk, investors' objectives. A trading plan is a researched and written document. This is the key word I want to point out over here. A researched and written document. So you cannot, anytime you make a research, you come out with a conclusion, right? You come out with a conclusion. You come out with a certain belief about the subject. So when it comes to trading, you need to research. Your research depends on the system you're trading, your understanding of the system you trade. So when you have a solid understanding of the system you trade, it becomes a researched system, right? So a researched and written document. This is why I said you cannot create a proper trading plan without having proper education on what trading is all about. And that is why I said also you need to have a good understanding of level 100 to level 400 before you get on this. Without a good understanding, the trading plan makes no sense, right? So it is not just about writing something down. It is about having a good understanding of what is written and how to apply it in real time. So a trading plan is a researched and written document. For your trading plan to achieve its objective, you need to write it. It must be a written document. And when this is written, it needs to be accessible. It needs to be accessible easily. You should not create a trading plan and have it dumped somewhere. When you create it, you have it in your trading area. You can simply paste it on your wall or have it on anywhere you can see it easily. It is a constant reminder of what you should do or what you should not do as a trader. So it needs to be accessible. It must be accessible for it to achieve its objective. So this is a document that we are going to create. And on this lesson, we are going to create one of these documents to show you how easy it is to create a trading plan. And if you are in Blue Vision, if you follow Blue Vision to the T, you should know how to apply a trading plan. So easy. So I believe by default, everyone can also follow the same steps I'm about to take to create their own trading plan also. So what goes into your trading plan? These are some of the items that goes into your trading plan. These are some of the things that goes into your trading plan. Your goals as a trader. What do you want to achieve as a trader? What are your goals? Your individual goals. The risk management system. How do you plan to manage your risk? How do you plan to manage your risk? How many percentage of your account do you plan to risk in the market? Your strategy. What strategy do you trade? How can you implement your strategy perfectly? Your entry system. How do you want to get entries in your trade? Right? Trade management. How do you plan to manage your trade? Your trade analysis. Your market analysis. All this comes into plan. So these are some of the things we have discussed in the program. So like I said, if you did not go through everything we've done so far, you cannot have the answer to all this. But we've gone through all this, you will have the answer to all of this. You will have the answer to all of this, and then you can know how to set or how to create your trading plan. So one of the things that we are also going to look at is this over here, which says building your trading plan. How do you build your trading plan? What goes into it? What goes into it? And also keep in mind, your trading plan is a document, just one document. So your trading plan, the rules and regulations that goes into this document are straight to the point, right? They are straight to the point. When you create a trading plan, it contains rules and regulations which are straight to the point. You do not want to have a lot of stories. It should be straight to the point. So do this, do not do this. Do this, do not do this, right? So when you say it, you know exactly what it's talking about. So one of the things that also goes into your trading plan is, the first thing to know is be able to identify your trading style. We have talked about trading style. What are trading styles? What kind of trader are you? Are you a scalper? Are you a day trader? Are you a swing trader? Are you a position trader? Are you an investor? You need to identify your trading style. So we are going to create a default trading plan over here. So this is a Google Sheets. You can use your MS documents or what have you and create a trading plan. So the first thing we want to consider is my trading plan. So I named this my trading plan for me, and you can just pick up these to create your trading plan. If you trade television, there's gonna be no much difference in our trading plan. It's gonna be almost the same thing or just a little difference. So my trading plan, and the first thing that's gonna go into this is my trading style. What style am I trading? My trading style. And my trading style, I am what? I am a day trader. I am a day trader. Or let's just go straight to the points. Day trading. Day trading. Let's reduce the font size. Okay. You can make this, you can design this as you want. So that is one of the first thing that goes into this. So day trading, we all know what it means to be a day trader. We all know the time frame that goes into play when you are a day trader. We all know what you should focus on when you are a day trader. So the next point on this is, what are the time frames? When you know the kind of trader you are, you should know your time frames. You should know your time frames. So what kind of time frames are you trading on? So where am I getting my trades? What are the time frames I want to use to get my trades? So my time frame, this says my time frames. And on my time frames, what are the time frames for a day trader? My daily, my reference time frame, right? Reference and major. And what is my reference time frame? My reference time frame is my daily time frame. So, which means I want to use my daily time frame in line with daily N in line with my 4 hour and 1 hour. 4 hour and 1 hour. So these are my time frames. So this simply tells me that for as long as I want to get a directional bias, right? I want to get a directional bias. These are the time frames I want to pick my trades from. My daily time frame shows me a long-term perspective of the market, but my actual trades comes from the 4 hour or the 1 hour. I'm taking trades based on the 4 hour time frame or the 1 hour time frame. But my I time frame is my daily time frame. This is my reference time frame. So major time frame is this or this, right? So that is about time frame. When you know your trading style, you can know your time frames. If you do not know your trading style, you cannot be sure of what time frames you want to use for your trading plan, right? So the next thing is your market. What are the markets you want to trade? What are the markets you want to trade? So you need to identify a list of markets you are strictly going to be trading. Strictly going to trade. So when you have a trading plan, you always need to go by the rules. When you break a rule, you are going to see it on a trading plan, and it is bad for business. You do not want to make a decision which is bad for business. You want to go by the plan, right? So on the market, I always advise that we trade no more than 3 markets. So markets or watch list, you may decide to call this your watch list. So my watch list, I could have these are examples. You could have your market as well. JPY. Could also have EURUSD. These are just examples. And let's say XAUUSD. Go. These are examples, right? You have any market of your choice in your trading plan. And the next point we want to consider is indicator. Do you trade with any indicator? What is your indicator? For your Blue Vision students, your indicator is what? Price. You are not using any technical indicators, RSI, whatever it is. Your indicator as a Blue Vision student is the naked price. And that's the best thing you can have to trade. That's the best thing ever you can have to trade. When you understand price, you are set for life. So your indicator as a Blue Vision student is your price. So over here, you simply have your indicator. It says naked price or price. Let's call this price. That is your indicator, which means your trading decisions is based on what price trades. All your trading decisions, you are buying, you're selling, your understanding of the trend, your understanding of the market is based on what is happening on the chart, based on what is happening on the market, not based on what any of these things says. So your understanding is based on what is happening on the live market, on the naked chart, without any technical indicators on your chart. So I always, like I've always been teaching, like I've always been saying, price is the best thing you can use to trade. When you have a good understanding of price, everything else should be built upon price, right? So your indicator as a Blue Vision student is price. Well, nothing else. And the next thing you want to look at on your trading plan is your entries. How do you want to get your entries? How do you want to get your entries? What time frames do you want to get your entries? So this is a little broad concept when you look at the entries, because you need to look at your entry confirmations and your entry time frames. And for a Blue Vision student, your entry confirmations are what? Rejections. And when you look at rejections, we have grouped rejections into 2. We have the candlestick patterns and we have the major market patterns. So your entries, we are simply looking at the rejections. Okay. Rejections. Let's make this lowercase. rejections, and under rejections we have the reversal candlestick patterns, reversal candlesticks, and major market patterns. So this is one side of the entries. So another part of the entries is what time frame do you want to pick these entries, right? What time frames do you want to pick these entries? So we're going to go to another line and we're going to have time frame. So if you are the type who loves taking your entries on the high time frame, you simply have your high time frame. You can have your major time frame or your minor time frame. If you are the type who loves taking entries on high time frame, if you want to take entries on high time frame, you can have your major time frame and your minor time frame. If your major time frame is your 4-hour time frame, your minor time frame is a time frame below your 4-hour time frame. That is 1-hour time frame. And likewise, if your major time frame is your 1-hour time frame, your minor time frame is gonna be the 30 minutes time frame. So these are the time frames you want to wait for price to print your rejections before you take an entry. In blue vision, if there is no rejection, there is no trade. If there is no rejection, there is no entry confirmation. Simple as that. So you want to apply your rejections with these given time frames to pick your entry. So you should not have major time frame, minor time frame as your entry time frame. Whilst in real time, you are going down to the low time frame to pick your entry. So your time frame should show the time frame you should pick your entry in real time. If you like to take your time, if you like to pick your entries on the low time frame, you simply put in your low time frame, right? Your M15 and M5. If you like to take your entries on the low time frame, you simply punch in M15 or M5 straight up. So if you like the low time frame entries, you simply do this: M15, M5. So like I said, these are rules. So it depends on what works best for you. So at this stage of your trading, you should know what works best for you. If you like to pick entries on the low time frame, or you like to pick entries on the high time frame, we have discussed everything that goes into all this. We have a whole lessons about entries: entry 101, entry 102, entry 103, entry 104. All these talking about the differences between these things. So you should know what works best for you at this time. You should know what works best for you at this time. So this is about entries. So the next thing we want to look at is what? The next point. And the next point talks about your exit. How do you want to close your trade? How do you want to close your trade? Your exit. So when you have entries, you should have exit. Your exit, according to Blue Vision makes it a whole lot easy. If you trade, there are people who trade different systems whereby their exit system tells them when price hits a certain fib level, they should close their trade. There are people who trade other systems whereby their system tells them when price touch a certain indicator level, they should close their trade. But according to Blue Vision, your exit is always your major LO high, the next major LO high. Your exit is always the next major LO high. So how do you close your trade? You close your trade when it's a major LO high, right? Major LO highs are your exit confirmations, nothing else. Nothing else. So the next point on our list says your stop loss. What is the maximum size of stop loss you want to set? So stop loss goes in consideration also. So if on your account you do not want to use more than 40 pip stop loss, that's going to be your maximum stop loss. You're not going to set any stop loss beyond 40 bips. So trading plan, like I said, all these are rules. Rules, you do not want to break any of them. So your stop loss also is gonna come. So it depends on the market you trade. Like I said, if you trade exotic pairs, if you trade indices, your stop loss could be a lot bigger compared to somebody that trade just currencies, right? So if you trade volatile markets, you may need to consider setting a much bigger stop loss. You may be looking at 70 pips, 80 pips stop loss. But if you trade just normal currencies, your stop loss maximum could be, let's say, 50 pips. Let's say 50 pips. 50 pips. So which means on every stop loss, on every trade you take, you do not want to have a stop loss that is bigger than 50 pips. This is going to be your maximum stop loss for every single trade you take. So there are times whereby your stop loss could be 30 pips or 40 pips, but no more than 50 pips. No more than 50 pips. So the next point on our list says news. So there are times in the markets whereby we have economic news or political news release and all of that. So do you want to be trading during this time, or do you not want to trade during this time? That is what goes into this. So news is all about asking yourself, are you gonna be trading during news release, or are you not gonna trade during news release? So it's all about, during news release, the markets most of the times would act unusual. We could experience some flash volatility. Price could be very volatile during news. If you have elections, if you have, for example, when there was Brexit, the market was so volatile, it moves so fast. So if those kind of conditions is not suitable for you as a trader, you do not trade during news. But if you believe you can handle this kind of pressure, then you may decide to trade. So this also is part of the rule. So if there is a news release, or if there's going to be a news release, you decide if you want to trade during this time or not. So if you want to trade, you simply type yes. If not, type no. So this tells you that during news, no trading. Or during news, you can trade. No trading. And also, to some people, we have people who believe a news is a confirmation for their trade, right? Who believe, let's say, Donald Trump is about to increase importation or something, and they believe that is going to boost the USD or something. There are people who simply take trades based on that. So in Blue Vision, we take trades based on technicals, not fundamentals. We are not buying and selling in the market just based on fundamentals. We take trades based on technical indication, price actions. So we are not going to trade because Donald Trump is about to say something or whatever. We are taking trades because we can see something on the chart. So that is another part or another aspect of news. So you have to decide if you want to trade using the news as an indication or not. And keep in mind, our ultimate indicator is price. So when there is news release, no trading. That is according to my rule. If you can stand trading during the news, you simply have yes, you trade. Simple. So the next point you may also consider is your risk to reward. This is one of the most important aspects of trading plan. You cannot trade successfully without having a good or a standard risk to reward system. This is very important, extremely important. So your risk to reward system, the other time we talked about risk to reward ratio, and we also talked about your lot sizing. When you look at risk to reward, a lot goes into risk to reward. It is not just about the ratios, right? It is not just about the ratios. A lot goes into risk to reward. You have to consider lot sizes, you have to consider stop losses, and all of that. But ultimately, you should know that whenever you have, let's say, for example, you have 50 pips as your stop loss, your reward should be no less than 100 pips. no less than 100 pips. And how do you determine what goes into that 50 pips stop loss? You can determine what goes into that 50 pips stop loss by understanding your lot sizes. Your lot sizes depends on your account size. You need to know how much you have in your account size to be able to determine what lot size is best for your account. And when you determine what lot size is best for your account, you can be able to tell what stop loss is best for you. So for somebody who trades one standard, such person may not be able to set a stop loss of, let's say, 50 pips. Such person would set a stop loss of, let's say, 20 pips or 30 pips. So your decision on risk to reward affects your stop loss and also your lot sizes. That is the whole point I'm trying to make. So your decision on risk to reward, it affects your stop loss and also your lot sizes. But we have talked about stop loss here, which is your maximum stop loss size in pips. So in this case, we are going to look at the lot sizing and the ratios. So risk to reward, the first thing we want to look at is the lot sizing. So we are going to look at that. What lot sizes do you want to trade? What lot size? It depends on your account balance. It depends on your account balance. So somebody may decide to trade 0.10, let's say 0.10, one minute, 0.10 on each $500 balance. So which simply means for every $500 balance, it trades 0.10. So if he has a $1,000 balance, it trades 0.20. So this, in this case, it's lot sizing. This is the lot size aspect of it. Okay, you know what? Let's call this, let's make this 0.01 on every $100. This is a lot more conservative. So let's make this. So for every $100 balance, trade 0.01, right? And the risk to reward ratio, the ratio comes next. So your ratio in this case, you have no less than 1:2, 1:2 system. Minimum 1:2 ratio. So this simply tells you that for every trade you want to take, you need to make calculations of your risk to reward. So if 1:2 is not met on any setup, you are not taking that setup. So the minimum, so for every trade you want to take, you must have no less than 1:2 risk to reward ratio. So if you have to risk 50 pips, you need to make sure you are able to get no less than 100 pips back. So risk to reward accounts for your lot size. What lot sizes are you trading? Your lot size and your stop loss goes in line. Your lot sizes depend or determines your stop loss size. Then when you have these two figured out, the next thing is the ratio. So you do not want to take a trade which is 1:1. You want to take a trade which is no less than 1:2. So all this comes back down to your profitability. When you take trades which are just 1:1, your rate of profitability reduces. When you take trade which is 1:2, your rate of being profitable increases. So you do not want to just take any trades because you feel like trading. You want to take trades which goes in line with these rules. These are rules, vital rules. This is your trading system summarized. This is your trading system summarized in one single sheet. So you want to strictly go by these rules to pick every single trade you take. Next point here. Okay, that's the last point here. Let's go back once again and see some of the things on this point here. It says your trade analysis, right? Trade analysis. How do you analyze the market? How do you analyze the market to pick your trades? How do you do that? So let's call this analysis. Trade analysis. How do you analyze the market to pick your trade or to know if you have a setups? So do not forget we talked about two trend concept, 2TC. We talked about two trend concepts. So when you remember what we discussed on two trend concepts, you know exactly how you need to analyze the market. So anytime you want to trade, anytime you want to find a setup, you simply want to switch. This is the same approach you want to use to analyze the market. Two trend concepts. Your two trend concepts works with your major, your reference, and daily time frame. We have a whole lesson on two trend concepts. So when you understand what we discussed on that lesson, you should know what to do based on trend analysis or trade analysis. You would know what to do over here. So how do you analyze the market? Two trend concepts. Simple. Like I told you, Blue Vision makes all these very easy and straight to the point. Super easy and straight to the point. So by simply mentioning these things, you should know what they mean. And that's why I told you, without going through level 100 to 400, you may get lost. You may not know what you're doing. So to avoid getting lost or not knowing what you're doing, you need to have a good understanding of what we've talked about. This is very important. So the next point, let's see what other points can go into the trading plan. The risk management. Okay, we've talked about risk management is part of the risk to reward. Your stop losses, your lot sizes is all part of risk management. And the other thing is your goals. What is your individual goals? You may simply have your goals written also in your trading plan. Your goals can be written also in your trading plan. The goals could be a very broad. The goals can be a very broad concept. Your goals could include your monthly targets. It could also include what you want to achieve trading wise. It can include a lot of things. It depends on what you are looking at. So according to my system, or according to my perspective, I'm just going to have monthly targets. That'll be first part. Monthly targets, and we have 50% ROI. 50% ROI. And this simply tells you that on every month, I want to make no less than 50% on my account. I want to increase my portfolio by 50%. And this is very easy when you apply the rules. Like it's so easy. You do not have to trade. You do not have to over leverage your accounts to achieve this. In a month, you can achieve 50%. This could also be 30%, 40%, or whatever makes you comfortable, right? Whatever makes you comfortable. Like I said, this is just a trading style based on my perspective, like based on the teaching, right? This current teaching. So you can edit this to fit in your personality. You can edit each of these to fit in your personality. This does not mean you need to trade this pairs, right? It doesn't mean that. You can edit this to fit in to your personality and your choices. So my goals, the first part could be monthly targets. And you could also have a second part, which could be what you want to achieve Maybe you want to pay your candles with your profits, or you want to pay off something using your monthly profit or your profits from trading. You simply have that written under the goals. And pretty much this is really everything that is so important when it comes to trading. These are everything that is so important when it comes to trading. Like I told you, they are straight to the point rules and regulations. Straight to the point rules and regulations. Trading style, you're a day trader. As a day trader, you should not be on the low time frame picking trades. Your time frames, you know your time frames, you know the time frames you want to pick your trades. Daily H4 1 hour. Your markets, what markets do you want to trade? You have them here. Which means on your MetaTrader, on your trading platforms, you need to delete every other market. Your watch list should only be these 3. You need to delete any other market on your trading platform. So the next thing you want to do is your indicator. You know what you're trading with. Price. If you trade price, there is no reason for you to have any other thing on your chart. There is no reason for you to have any other item on your chart. Nothing else, none of these should be on your chart. And when you look at my chart, when you look at every sessions I've ever been on with you, you would never see any indicator on the chart. The chart is always this way. Always this way. Naked chart. That is it. So it's all about rules. Your entries, your rejections, you know what you're looking for. Candlesticks, you know how they should trade. Market patterns, you know how they should trade. You know your entry points, you know your necklines. You know how you want to react based on these things. Your time frame also, you know the time frames you want to pick your trades. Right? Very simple. Your exit, where do you want to close your trade? Or what confluence do you want to use to take a profit or to close your trade? In Bluefish chart is very simple, straight to the point, your major low high. This is all the confluence you need. If you have major low high with rejections, it tells him close the trade. Simple. If you have a major low high with rejections, it tells you close your trade. That is exit. Stop loss, you have it here. And this also, you could just have these maybe 30 to 50 pips. This tells you for every trade, no more than 50, no less than 30. So during news times or fundamental release, no trading. Simple. Risk to reward, you know what you're looking for. You are looking for trades with no less than 1 to 2 risks to reward. You are looking for lot sizes of 0.01 on every $100 balance. So if you have $200 balance, you are looking for 0.02. So the more your account increases, the more you increase your lot sizes. That is all this is talking about. And your trade analysis, how do you analyze your trade? How do you analyze the market? By applying the blueprint. 2 trend concepts, simple. Your goals, what do you want to achieve? Trading plan, as easy as this. As easy as this. Very easy as this. So the most important aspect, risk management, trade analysis. Trade management also is very important. You know how to manage your trades. We have discussed this over and over again. So you just have to take all these very seriously. Like I said, trading plan is a plan. It's a plan. You could also make a diagram of these things and attach to this plan so that it becomes very much visual to you. For example, your rejections, you know how they want to break, you know how they should break. You can make a diagram of them and attach them to your notes to make them a lot more visual for you. So these are really what goes into your trading plan. You can design it however you want to. You can add more visuals to them. If you're a visual kind of person, you can add more diagrams and visuals to make them a lot more visible for you. And also, if you have your trading setups, you could also add them to your plan. In Blue Vision, it's simply TCT or CTT. That is the two major types of setups we have. So you can have setups. What setups do you want to trade? If you want to strictly trade TCT, you simply have TCT. If you want to trade both, you simply have TCT and CTT. So it depends on what you want to strictly trade. So if you like to trade TCT, you have TCT, and you know what goes into TCT. You can make a diagram of them and attach them to your note if you want to. If you want to trade CTT, the same thing. If you want to trade both, same thing. These are the two main types of setups. TRT is just an extension of CTT. So if you have these two, you have pretty much covered everything. So these are the main rules, these are the main items that goes into your trading plan. So you can revise these over and over again. You master these, and you can add diagrams, like I said, to make it more visual if you need to. But these are the base items that should go into your trading plan. You make it visual, you make it very nice as you need to see them, and you can print them out and have it on your trading area. If you have a trading area, you just hang it somewhere and to make sure you can see these things over and over again, to remind you every single time on what you need to do every time you trade it. So that is everything on this session. I'm going to encourage you to make your trading plan according to your personality and according to what works best for you. So everything I've written away may not work for you, but make your trading plan using these templates. This is more or less a template. Using these templates, you make your trading plan using these templates, and you are good to go. You are good to go. You make a trading plan, and I'd love to see some of your trading plans. So if you have done your trading plan, you can just hit me up, and I would love to see what you're able to come up with. So that's gonna be everything on this lesson. I hope to see your trading plan, and I'll catch you on the next lesson. Peace.